clearly Bitcoin price increased over time. So that could be adoption, right? Maybe an adoption-based valuation model, S-curve, for example. But then again, what drives that adoption? So for me, in this model, I did a little bit different than the first model. I predicted the average value and I inputted the average value of each halving cycle. If you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption. If Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential.
Bitcoin is on the verge of a huge price increase. That's the latest prediction out from renowned analyst Plan B, who uses the stock-to-flow model to predict Bitcoin's price. Plan B has used this model before, and it correctly predicted Bitcoin's jump from $4,000 to $55,000 a few years ago. So, naturally, many people trust what he has to say next. Bitcoin's price has already climbed by 44% this year, and Plan B believes that this is only the beginning. According to him, we could see Bitcoin double in price by the end of 2024. He predicts it could reach $100,000 or more, and possibly hit $500,000 by 2025. He even speculates that Bitcoin could go as high as $1 million in the years to come. Make sure to stick around until the end of the video to hear the in-depth discussion behind Plan B's latest prediction and insight. But before that, today's video is brought to you by Crypto.com. If you still haven't got a crypto card yet, you're living in the past. Traditional cards have annual fees and transaction charges, but the Crypto.com Visa card doesn't. You can spend your crypto anywhere, and the benefits are amazing. With your Crypto.com Visa card, earn up to 5% back in CRO rewards on every transaction. Enjoy 100% cashback on Spotify, Netflix, and Amazon as a new customer for 6 months. Get complimentary access to airport lounges with a sleek metal card. Crypto.com is giving a $25 sign-up bonus for Jamie Tree viewers. Here's how to get your $25 bonus and start earning up to 5% back. Download the Crypto.com app via the first link in the description or scan the QR code on screen. Sign up using our referral code NUTTY for an instant $25 bonus. After approval, here's how to get your Crypto.com card. In the Crypto.com app, first tap the Card tab on the navigation panel. Select your card tier based on the required CRO staking amount. I have a Ruby Red card. You need to lock up 400 USD of CRO for 180 days, which is then unlocked. Accept terms and conditions and ensure you have sufficient CRO in your wallet for the stake period. Then, submit your delivery address. You'll then receive your Crypto.com Visa card, start making transactions, earning rewards, and enjoying the perks. To claim your $25 bonus and earn up to 5% back on transactions, click the first link in the description to get started with Crypto.com today. Now back to the video.
As an input in a very simple, linear, univariate regression model. It's very rough. It predicted 55K Bitcoin at the time when, as you said, Bitcoin was below 4K. And well, yeah, that was a very nice correlation. It's the correlation that's shown in the graph that you show. And well, a lot of people dismissed it right away because 55K sounded absurd at the time. But some other people loved it, and especially its fundamental nature. And well, a lot of discussion happened since. There's a lot of misunderstanding about the model. Apart from very real discussions and critique that is very valuable, there's indeed this misunderstanding, and the wide predictions bands, the very rough estimates are one of those misunderstandings. Yeah, one thing I want to point out beforehand is that Bitcoin has an implied volatility or realized volatility, historic volatility of around 80%, which is very, very high. It's probably one of the most volatile assets on Earth. So yeah, it seemed appropriate to refit it to see either if the prediction was okay, still within the bands, and if the formula would change. So first thing is and it's shown in the yellow line there. I refitted the model with 5 years of new data, so that's 60 months, and what we can see is that the average value over the last halving period of Bitcoin was $34,000, and that's below the $55,000 that the model estimated, but still very close from a modeling point of view, and especially if you keep in mind that the model was made and the prediction was made in 2019 when Bitcoin was below 4,000. That straight line, the value and the formula, they haven't changed a lot. The parameters are still the same. The results are still the same. It predicts now 50K instead of 55K. It predicts 500K for the current halving cycle, and 4 million for the cycle after 2028 halving. But I think that's one of the misunderstandings, the wide prediction bands. On the other hand, there's also the fact this model, I did a little bit different than the first model. I predicted the average value, and I inputted the average value of each halving cycle. So if the result in the next halving period is anywhere near the result that we got last time, so for example, if the price is not 500K that the model predicts, but 300K, I would be more than happy. So one standard deviation is roughly 2x the model value, and divided by 2 the model value. So for this halving cycle, it would be the point prediction is 500K, and one standard deviation band is 250K to 1 million. And the 2 standard deviation band would be 3x and divided by 3. So those are the bands. And that's for the average about the period. So if we look back in 2028 and the average is, let's say, below 250K, that's out of the 1 standard deviation band, but in the 2 standard deviation band. But that would be kind of, it could be, it would be still okay from a 2 standard deviation point of view, but I would be a bit surprised by that. I think that's one of the big questions for this halving cycle and the years to come. Will there be diminishing returns or not? Because that would invalidate a lot of models and validate a whole set of other models. And that's the big question that every investor should answer for himself. I do not believe in diminishing returns, and I've been very clear about it. I do not believe in diminishing returns for the exact reason you're talking about. That the S-curve, if you look at the S-curve, we don't know where we are exactly. If we're at 1%, 2%, 10%, I don't think we're even at 10%. But if you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption, and then it levels off. And so it must follow that if Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential. So no diminishing returns until about 50% of adoption. And I really believe that. I also believe that I can understand why people see the diminishing returns. Of course, if you look at the data, you see it. Especially the last cycle was very off. But I think it's an outlier. Actually, if you look at no matter what model you take, the addresses, models based on number of addresses, model based on stock to flow, model based on time, it doesn't matter. You'll see three big outlier years. That's 2013, 2017, and 2022. So the big all-time highs of 2013 and 2017, of course, but also 2022. And that was too low, and so that, in my view, causes the data to look diminishing, where in fact we'll see exponential growth. But I'm not sure, and it will be that's very interesting to see next couple of years. Maybe we could go back a little bit to the chart before this one, because I love that chart. It shows so many things. It shows that indeed the most of the rise is just after the halving, and then it sort of flattens out. It's stable for 3 more years, and that happened 4 times now. So that, yeah, I don't know if that's a pattern or random, but 4 times it's quite a structure. And then it shows the diminishing returns. So the diminishing returns guys would expect that green line to be below the brown line, somewhere between 100 and 200,000, maybe crashing below 100,000 even in the bear market. And if we just track this line, we'll know what there is. And the third thing you can see is that this wide prediction band between it is shown in this graph. It's the upper line, the yellow line, and the lower line, the brown line. That's about as wide as the prediction band can be. So you can almost see the 250K, 1 million prediction band of stock to flow that I just mentioned. So that will be very interesting. Going to that other chart after this. So basically, here I try to dumb down stock to flow to its core, because there were so many misunderstandings, because it was too difficult for some, too much models, too much statistics, too much mathematics, and it was pigeonholed by others into deep econometric discussions about autocorrelation and co-integration, which is nice, but it distracts from the core. And the core, in my point of view, or my hypothesis I should say, is that the halving increases scarcity, and that scarcity is valued by investors either directly or indirectly. So they invest directly in Bitcoin because it's scarce, or they indirectly feel that scarcity because there's no supply and there's no market. You can't get them. And so the core is the halving. And if you thus make a very simple stock to flow trading rule that says buy Bitcoin 6 months before the halving, and the halving is every 210,000 blocks. That's what you see on the x-axis there. So every 210,000 blocks, there's a halving. That's every 4 years. If you buy Bitcoin every 6 months before the halving and then sell it 18 months after the halving, the 2 years around the halving, you would outperform buy and hold Bitcoin. And buy and hold Bitcoin is that blue line. That's just the Bitcoin price. If you apply this rule, you get the green line. So you'll end up significantly higher than the buy and hold. And even more important, if you do the inverse, if you would buy Bitcoin 18 months after the halving and sell it 6 months before the halving, so you would hold it only the 2 years in between halvings, you would end up with the red line. You would decrease your value over time. And that, I think, is not random.
Plan B explains that Bitcoin's price has been steadily increasing over time. which could indicate growing adoption among users. He refers to an S-curve model that illustrates how new technologies, like Bitcoin, gain popularity. According to this model, if Bitcoin continues to follow this trend, its value could experience significant growth until it reaches about 50% adoption, after which the growth might slow down. While some investors worry that Bitcoin might not experience the same level of growth as before, Plan B disagrees. He believes there is still considerable room for growth due to increasing adoption and the halving events that reduce Bitcoin's supply approximately every 4 years, making it rarer and potentially more valuable. He offers a simple trading strategy: buying Bitcoin 6 months before a halving event and selling it 18 months afterward could yield better returns than simply holding it. Anyway guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it provided you with some value. I'll see you all in the next one, and as always, all the best.